watching Business Today Television. I'm Sakshi Batra and this is a special edition where our focus is on the primary market space. The IPO rush has begun and there is another IPO that is in the offing as well. I'm talking about Bengaluru-based Stanley Lifestyles, which will be opening its 537 odd crore rupees IPO on June 21st. Now the company has set a price band of 351 to 369 rupees per share, which closes on June 25. Investors here can bid for a minimum of 40 equity shares and then in multiples thereafter in one lot as well. Now within this IPO, there is a fresh issue of 200 crores and an offer for sale of about 337 odd crore rupees as well. Now to detail for us what is the exact plan of the company going forward, the vision on growth and the projections, I'm now joined by the company's top management. Sunil Suresh joins in. He's the Managing Director of Stanley Lifestyles. Warm welcome to you, sir, on Business Today Television. Good to have you with us. Do tell us, first up, you have a plan of 537 odd crore rupees of an IPO, within which there is a plan of raising about 200 odd crore rupees. What is the aim and the objective of raising this money? What will it be used for?
Good afternoon. Thank you very much for having me here. Primarily, the primary is going to be used for retail expansion. We are quite heavily penetrated in the south market. Now we plan to get into the west and the north zone. It will be mostly used for retail expansion.
Okay, understood. Now, as far as the offer for sale portion is concerned, that's also by about 337 odd crore rupees. Could you tell us who are your selling shareholders? Are you yourself participating? And what could be the shareholding pattern that we can expect later on once the company gets listed?
Yeah, we as promoters will continue to hold a majority of in excess of 57%. And we have a little bit of OFS coming in from us as well as from other directors in the company, plus also the private equity investors, and they are parting with 50% of their holding.
Okay, understood. Now, when it comes to retail expansion, you're talking about, opening new stores. Could you tell us, I think you have about 62 odd stores right now. And could you bifurcate it for us as well? Which are your own company-owned stores and which are the franchise stores within this? And how is the plan really going to be going forward from here?
Sure. First of all, we are a manu retail company. We have been honing our skills in terms of being able to produce international quality furniture. We have 2 facilities in Bangalore, and we have a very strong design and NPD team, which is actually the soul of our business is mostly the manufacturing. Almost 70-80% of our products are bespoke manufactured. So we customize for our clients. We mostly compete with European brands that are present in the country. So we have 3 different segments in which we are present in terms of retail. We are present in the super premium or the luxury end of the market with Stanley Level Next, where we offer complete home solutions. Then we have premium, which is Stanley Boutique, where we offer mostly living room, dining room and bedroom furniture. And our value premium, which is sofas and more, that we offer again loose furniture, which is typically sofas, recliners, beds and mattress. We have currently 63 stores. In the major cities of Delhi, Mumbai, Bangalore, Hyderabad and Chennai, we have company-owned, company-operated stores. We have also franchisee-owned, franchisee-operated in various other cities. We are currently present in about 22 different markets of the country. And going forward, we will be growing mostly with cluster growth. We'll be taking one city at a time. Bangalore, we have a kind of more or less come to a threshold with about 20 odd stores. Hyderabad is the next plan where we want to grow more in Hyderabad city. Then comes Mumbai, and then comes Delhi.
Okay, understood. Now, within this entire segmentation that you've given us an idea of and the verticals, the division within the segments as well, do tell us what is the kind of revenue contribution that you get from each of your verticals, which is the most revenue contributing vertical of yours, and also in terms of margins, do you get higher margins in your super premium, your luxury levels, and what is the kind of margins you're operating at right now, sir?
So primarily, we are at a B2C business level, retail level, we are operating at in excess of about 67-68% margins. So currently the margins are fairly evenly distributed, while at the super high end or a luxury segment, we are still yet to grow. I think finally the margins will be better there. But nevertheless, currently the business is more or less equal in terms of percentage what it's contributing both from the top line as well as the bottom line in terms of margins. We have been a profitable company for more than 10, 12 years now, and we continue to grow very organically with a keen eye to make it a more profitable business as we go forward, because with scale, we're able to kind of get much better efficiencies in terms of raw material purchase and manufacturing.
Okay, understood that, sir. Also, do explain to us in terms of your, you did talk about your geographical expansion. Right now, you're mostly in your southern area, southern part, and gradually you will be looking at both expansion in west and north as well. From about current 63 odd stores, how many are you really looking at building in this current fiscal year? What is the long-term vision?
Yeah. So primarily, we are not in a great tearing rush to kind of expand in our country. It's very difficult to get the good locations. So we're very specific in terms of getting the right locations, the right rentals. We don't have a retail-friendly environment in most of the cities. We have to create our own. So we're very fussy in terms of getting the right locations for our stores. We're also fairly data-driven. We understand from RERA where the premiumization of urban living is happening. So we follow the data, and considering where the premium homes are coming, we identify these kind of locations and grow our business. We're not assuring or promising any kind of exponential growth. We would like to grow organically. To grow our luxury brands, it actually takes a long time. And today, after many years of being in business, we have been accepted as a good alternative to import brands. And our thinking is to take the store count to between 100, 110 in the next 3 years. Very meaningful expansion. Every store has to be profitable. Currently, every store is profitable. That's the way we are going to grow going forward.
Okay. So also explain to us, since you did say that you're now profitable for about 10, 12 years odd, where do you see the projections going forward, top line, bottom line? At what rate would you be really looking at growing over the next few years? Do you have a vision for FY25 to FY27 on both top line and bottom line?
Yes, so as I mentioned to you, we are a very organically growing country. My target is to grow at a very organic pace of about 20 to 25% year on year, but definitely keep expanding the profitability, because as I mentioned, what is the use of creating a luxury brand if you don't have the luxury of making better profits? So that's how we look at it. And also, like I said, with scale, with better management and with better efficiencies, we are able to definitely expand our profitability. Secondly, since we mostly compete with European imports, the prices of European products are going really high because of their labor cost, the power cost, and also the shipping cost. We have some very tangible benefits competing with this, because we have a headroom to grow. Point number one, a customer sees a much higher quality product, better finish, very well designed for our, Indian palate, and ergonomics and functionality is where we actually score. And also in terms of lead times, even if the European brands agree to do bespoke manufacturing or custom making for you, they take between 8 to 9 months to deliver, 7 to 9 months to deliver. We are able to deliver between 4 to 8 weeks. So that is a great advantage that we have. So I think, like I mentioned to you, we see an opportunity after so many years of establishing and being accepted as a premium slash luxury brand. We have opportunity to grow our business meaningfully in terms of top line, but definitely more higher profitability is visibility for us.
Okay, do you have any listed peers with which you are competing yourselves to, and what is the industry growth versus yours right now, sir?
So the industry growth is pegged at about 20-25% on annualized basis, and I think we are more or less keeping up similar track. Of course, there have been a few ups and downs thanks to COVID. There was a massive, pent-up demand for furniture just as we came out of COVID, and then there was a crazy pent-up demand for travel. There has been delay in inventory handovers due to builders having cascading effects. So we are expecting a lot of inventory to come into the market in terms of premium housing to come into the market in the next 1 to 3 years. And we believe we are in the right place, and we have kind of identified these markets, started expanding retail presence there. So I think we have a good opportunity to grow going forward even better than what we have done in the past. But as I mentioned, we will be very measured. We are not assuring or promising any kind of exponential growth. We can't. There's a lot of skill matrix involved. There's a lot of high-end material involved in what we do, and there is a opportunity to kind of expand our pricing, but that's how we want to go about it.
Okay. So apart from offline, do you also have online presence, and how are you competing with the e-commerce players which are emerging these days within the furniture space?
So I've been at this business for close to 28 years now. Have been watching what's happened in the world. Almost 10, 15 years ago, in countries, in advanced countries like America or Germany, most of the furniture people started saying that everything is going to go towards online. There'll hardly be any business left for typical, physical stores. But the truth is, even today, in the segment where we are playing, this is very important for you to understand. In the segment where we are playing, it is completely touch and feel. There's hardly 2% penetration through online sales. Online marketing, yes, but online sales is a very, very small percentage, and we really don't compete with the rest of the people who are present online, because their segment itself is completely different. For us, we cater to luxury homemakers who are mostly aged 45 and above or 40 and above, and 80% of our clients are mostly employers and not employees. Only 20% of our customer base is CXO level, employees of multinationals and large companies. So we still do a lot of traditional marketing, and also people do like to visit stores, experience the furniture, see, understand. It's a complete, family oriented kind of experience, and that's where we, appoint excellent stores. When people come in, we have trained staff. We tell them what we can do with the products, how we can customize it to their likings, dislikings, colors, options. So that's where we actually thrive. We are really not an online sales business. Globally speaking, the luxury furniture doesn't really sell online. I mean, as I mentioned, the penetration might be a very small digit just now.
Okay. Also, do tell us, any new product categories, verticals that you would be liking to explore going forward from here? You did name a few. You're talking about living room products. You're talking about kitchen products as well, which you're already present in. Are there any other verticals or new product categories on your mind?
So in the luxury end of our offering at Stanley Level Next, actually we have expanded in the last 5, 6 years. We have taken a lot of time and trouble to get the right set of people. We have had Germans come and set up a fantastic kitchen and wardrobe manufacturing facility for us. We do kitchens, wardrobes. So in the Level Next, in the high end of our business, or in the luxury end of our business, we do complete home solutions. We're able to take a complete home. We have technology which will actually give the customer a complete overview of how his or her home can be furnished, and we give a 3D rendering. We can even do a virtual walkthrough, so they get a complete idea as to how their home is going to look, which is almost 95% accurate. And for touch and feel, the store has a lot of products on display, and I strongly request people watching this, as well as people wanting to make homes, to visit our stores, because that's where you get a complete idea as to how we have displayed it, functionality, comfort, the whole lot of things can be learned from the stores.
Okay, well, thank you so much, sir, for speaking to us and sharing your ideas and insights as to how the company really plans to move forward from here. I wish you all the very best for the upcoming IPO, and we shall touch base again once the company is listed now, and so that we can get more idea as to and more inputs from you when it comes to projections going forward. Many thanks.
Thank you so much. Thank you for having us. Thank you.
Thank you. With that, viewers, we wrap up this very special conversation, upcoming IPO, and now you've heard it from the company's top management, what the idea is, how they plan to grow, and where are the opportunities really emerging for the company to grow at this point in time, competition, all of those aspects have been shared. I'm sure this will give you a better understanding before you go ahead and, look at this IPO as a prospective one where you would want to put in your hard-earned money as well. With that, we wrap up this very special conversation. Do stay tuned. Coming up next will be Market Today on the closing hour of the trade.
I'm in a driverless cab in San Francisco. This is mind-blowing tech. Let me explain. So this is